Welcome to the Asia Climate Finance Podcast, where our host and expert guests delve into and scrutinize the pressing issues and emerging trends in climate business and climate finance. We greatly appreciate your support. Please like, review, and subscribe to the podcast to help us grow and reach a wider audience. Be sure to take note of the disclaimers at the conclusion of each show. And now, here is your host, investor, analyst, and author, Joseph Giacobelli.
Good morning, good afternoon, or good evening, wherever you're listening from. Thank you for tuning in to episode 64 of the Asia Climate Finance Podcast. In this episode, we get some expert insights on a subject which we have not really previously addressed, namely the maritime energy transition. As many of you may know, the shipping industry is one of the hard-to-abate industries. Three of the top reasons are the long vessel lifespans, i.e. 20 to 30 years, are slowing fleet modernization, high energy density requirements for transoceanic voyages, and technical challenges in retrofitting existing vessels. We speak to Venus Zhao from CBL International and the Bandler Group. Venus has almost 2 decades of experience in the capital markets and has been focusing on sustainable finance for over a decade now. The Bandler Group is a global marine fuel logistics provider listed on the Nasdaq. Venus discusses how she thinks that the company is revolutionizing the maritime industry through sustainable biofuels and how the type of biofuel it uses, the B24 biofuel blend, actually reduces GHG emissions by up to 25% compared to conventional marine fuels. She discusses how CBL is positioned to capitalize on the projected 50% plus growth in the green marine fuel market despite current supply constraints. She also outlines how tightening IMO regulations are accelerating industry-wide sustainability adoptions and shares CBL's vision to lead the maritime sector's transition towards net zero emissions through diversification into biofuels, LNG, and methanol. I hope you find the discussion interesting, and please do email us for suggested topics for future episodes. Thank you. So as I mentioned today, our guest is Venus Zhao. Hello, Venus. How are you?
Hello.
Thank you very much for making the time. I think this is a very important topic that we're going to be discussing today. But before we get into the topic, could you maybe introduce a little bit about yourself, how you got into this business, something maybe outside the show notes, because we have already your bio in the show notes.
Sure. Thank you. Thank you for inviting me to this podcast. I'm the Director of Investor Relations and Public Relations of Bandler Group. I'm primarily responsible for investor relations, public relations, capital markets of the group. And I have more than 15 years in this area, including in ESG. So prior to joining the group, I was the general manager of Hong Kong office and general manager of capital market and corporate communication at Hong Kong listed companies, and assumed different management roles in Hong Kong and US listed companies and Fortune 500 MNCs. I've been in the ESG sector for several years. I think it's more than 10 years. So I'm quite interested in this sector. I would like to share with you later.
Sure. But how did you become interested in this, Venus?
Yeah, actually, I've been working in different listed companies, and I witnessed, the necessity of, ESG transition for different companies. And although they have different business sectors and also business nature, but I think it's a trend that companies will continue to transition into the ESG area.
Right. Even in Asia, right? I mean, because Asia is regarded as being a little bit behind, especially Europe, but even in Asia, even in China, it's happening, right?
Yeah, it's growing very fast in the ESG sector.
Great. Well, listen, I guess a lot of listeners may not necessarily be familiar with CBL International. So could you just give us 1 or 2 minutes on CBL and then also clarify a little bit the actual business as well as the business model of CBL very briefly?
Yeah, sure. So CBL International Limited, the Nasdaq ticker is BANL, is the listing vehicle of Bali Group, a marine fuel logistic company based in Asian Pacific region that was established in 2015. And we are committed to providing customers with one-stop solution for vessel refueling, which is referred to as bunkering facilitator in the bunkering industry. And we facilitate vessel refueling mainly through local physical suppliers in more than 60 major ports. And as of 16 April 2025, we expanded into 60 ports worldwide. And the group actively promotes the use of sustainable fuels and is awarded with ISCC EU and ISCC Plus certifications.
Right, and we can find all the different presentations from your previous results and all the details there, right? That's
Yes.
great. Now, I just wanted to maybe start talking about the bunkering business. What exactly is the link between CBL's operations and climate business and finance? In that shipping is one of the hard to decarbonize or hard to abate sectors. And traditionally, international container liners, bulk carriers and tankers use heavy fuel oil, HFO, heavy fuel oil, or bunker oil. Could you explain how the shipping industry is actually working to reduce its reliance on HFO or bunker oil?
Yeah, sure. So CBL is a marine fuel logistic company that's specializing in the facilitation of vessel refueling, what we commonly refer to as bunkering, in more than 60 ports worldwide. And rather than owning physical storage or refinery assets, CBL operates an asset-light, service-oriented model, and it cooperates with a broad network of local suppliers to deliver fuel to vessels efficiently and reliably.
Right.
The company offers one-stop refueling solution, handling procurement, logistic compliance for clients, which also includes some of the world's largest shipping lines. And this approach allows CBL to maintain flexibility, optimize procurement, and uphold high operational standards while navigating the complex regulatory and environmental demand for the maritime industry.
Right. Just to clarify something, when you say that you help your clients with compliance, what does that actually mean?
That means because in the bunkering sector, different ports have different regulations, as
Right.
well as the jurisdictions. So we
Right.
help the customer handling this as well.
Gotcha. Understood. Could you tell us a little bit more about CBL's biofuel operations? Now, CBL made, I think, significant strides in biofuel development, particularly with its B24 biofuel blend. So, number one, can you maybe elaborate on the environmental impact of this biofuel blend compared to conventional marine fuels? And also, as an additional question, how does CBL plan to scale its biofuel operations, and what are the next steps in expanding this offering worldwide?
Okay, sure. Thank you for the question. CBL has made major strides in biofuel development, particularly through the introduction of its B24 biofuel blend, which consists of 24% used cooking oil methyl ester, what we call is eucomi, and 76% very low sulfur fuel oil, VLSFO. And this blend offers a tangible reduction in life cycle greenhouse gas emissions compared to traditional marine fuels, supporting customers in reducing their environmental footprint. In 2024 alone, CBL's biofuel sales surged by over 628%, with key deployments in Hong Kong, China, Malaysia, and most recently, Singapore. And this achievement reflects both rising demand for green alternatives and the company's strategic agility in deploying low carbon fuels. And the B24 biofuel blend used by CBL offers a significantly lower environmental impact compared to conventional marine fuels. This blend is significantly designed for maritime use and contributes to substantial reductions in GHG emissions over its life cycle. The Euconi component is a second-generation biofuel derived from waste cooking oil, which helps reduce carbon intensity without competing with food resources or contributing to deforestation. And compared to traditional marine fuels, B24 can cut carbon dioxide emissions by up to 20 to 25%, depending on engine configuration and operational factors. And additionally, the use of very low sulfur fuel oil ensures compliance with IMO 2020 regulations, which limit sulfur content to 0.5%, significantly reducing the sulfur dioxide emissions and associated health and environmental risks like acid rain. And by offering this blend, CBL helps shipping companies lower their carbon footprint while continuing to meet regulatory requirements and operational demands. And the company's adoption of ICC EU and ICC Plus certifications also ensures that biofuel meets strict sustainability and traceability standards, and further in reinforcing the environmental integrity of its fuel solutions. And you also asked about how CBL plans to scale its biofuel operations and the next steps in expanding its biofuel globally. So to scale its biofuel offerings, CBL is leveraging in its existing port network and securing certifications such as ICC EU and ICC Plus, which validates compliance with stringent European sustainability criteria. And the company is focused on expanding coverage across both established and emerging maritime hubs, including recent entries into Mauritius, Panama, and India. And with the green marine fuel market projected to grow at a CAGR of 50.4%, CBL is well positioned to capitalize on this momentum by scaling biofuel operations and preparing for the next generation fuels such as methanol and LNG.
Talking about, the global market demand for sustainable fuels, which I think is a hot topic, how does CBL anticipate the demand for sustainable marine fuels evolving over the coming years? And how is the company positioning itself to capitalize on this particular demand? And also I've got an additional point, which is what about the actual supply? Do we have enough supply? So I'd like you to talk about the demand side, but at the end to also talk a little bit about the supply.
Okay, thank you. This is an excellent question. And CBL anticipates a robust rise in demand for sustainable marine fuels as shipping companies increasingly align with decarbonization targets and the regulatory frameworks. And recognizing this, CBL has strategically oriented its business to offer cleaner, higher margin fuel alternatives. And its growing presence in Asia Pacific and Europe, alongside its expansion into dual fuel capable vessel segments like bulk carriers and oil tankers, allows the company to diversify and deepen market penetration. Bulk carriers and oil tankers customer segments now contribute nearly 45% of CBL's revenue, up from 32% in the previous year. And you are absolutely right that the demand is very strong and growing on the sustainable fuels. However, the supply is far less than the demand. So I am also expecting the pickup of supply in the coming few years so as to meet the growing demand of sustainable fuels.
But will there continue to be a gap between very strong demand and supply, at least in the short term, say over the next 3 to 5 years? Or do you think that that gap could be narrowed very, very quickly in the short term?
We believe that there will still be a gap in the near future, like 2 to 3 years. Although the supply is picking up quickly to meet the demand, however, because, for example, the raw material of Yukon meat of this biofuel as the used cooking oil is still very few. So it still takes time to pick up to the demand level.
Right. Now, the regulatory landscape is evolving very, very quickly. Could you briefly explain such changes as the IMO 2020, which I think you mentioned earlier, and also upcoming GHG strategies? And what role do you see these regulations playing in shaping the market for sustainable marine fuels?
Okay, thank you for the question. The maritime industry is undergoing transformative change led by policies like IMO 2020, which kept sulfur content in marine fuel at 0.5%. And the forthcoming IMO GHG strategy and the few EU maritime regulations targeting significant emissions reductions by 2030. And these frameworks are accelerating the shift towards sustainable fuels. CBL is proactively aligning its operations with these mandates by expanding its sustainable fuel supply and investing in cleaner alternatives and maintaining compliance-ready logistics infrastructure. Regulations are not merely compliance challenges, but also catalysts for innovation and growth in the green fuel segment. And as regards the regulation play in shaping the market for sustainable marine fuels, regulations such as IMO 2020, the IMO GHG strategy, and the few EU maritime regulation play a critical role in shaping the market for sustainable marine fuels. These frameworks are driving a structural transformation in the shipping industry by imposing stricter limits on sulfur emissions and setting ambitious carbon reduction targets, such as cutting GHG emissions from ships by at least 40% by 2030. This mandate creates both a compliance imperative and a market incentive for shipping companies to adopt low carbon and alternative fuels, including biofuels, LNG, and methanol.
Right.
And for CBL, these evolving regulations serve as powerful catalysts for innovation and growth. They reinforce the company's strategic direction toward green fuel adoption, support demand for certified sustainable products like B24, and open new revenue opportunities in higher margin fuel segments. CBL's alignment with these regulations, demonstrated by its ISCC certifications, biofuel expansion, and investment in operational efficiency, positions it as a key enabler in helping the shipping industry meet compliance regulations while advancing decarbonization goals.
And just one follow-up, the IMO 2020 regulation and the other regulations you mentioned, these are global, right? Not just applicable to a certain number of countries. So that would include Hong Kong, mainland China, and all of these different countries that you guys operate in, right?
Yes, definitely.
So now the tough question. All the questions have been too easy so far. No, just kidding. But what about ESG integration? So how does CBL incorporate ESG criteria in its kind of like day-to-day operations and strategic planning? And also, in terms of governance, how does CBL ensure that sustainability is prioritized at the board and executive levels? Because I think many companies talk about ESG, but may not necessarily have somebody at the board level representing that. So how does it work for CBL?
Yes, this is a very important question for the ESG integration. CBL's ESG strategy is integrated deeply in both the day-to-day operations and long-term planning. Environmentally, the company focuses on emissions reduction via sustainable fuels. Socially, it emphasizes customer trust, employee well-being, and community engagement. And in governance, it maintains transparency and robust oversight. And ESG priorities are overseen at the board and executive levels, with strategic investments in automation, IT systems, and sustainability initiatives that align with global standards. And CBL's commitment to ESG is not just compliance, it's a cornerstone of the company's growth and value creation roadmap. And you asked about how CBL ensure the sustainability is prioritized at the board and executive level.
Right, right.
In terms of governance, CBL ensures that sustainability is prioritized at the board and executive levels by embedding ESG principles into its strategic decision-making and operational oversight. The company's leadership views sustainability not merely as a compliance requirement, but as a core pillar of long-term value creation. This commitment is reflected in increased investment in biofuel development, automation, and ESG-related initiatives, which were among the key drivers behind the rise in operational expenses in 2024. And these investments are deliberately guided and approved at the highest levels of the organization. And CBL's board actively monitors regulatory developments such as the IMO GHG strategy and Fuel EU Maritime, aligning corporate actions to remain compliant while capturing emerging opportunities in the sustainable fuel space. This governance approach ensures that sustainability remains a strategic priority, embedded into both the company's current operations and its long-term growth trajectory.
Just as a quick follow-up, Venus, if I could. So you've got very, very strong ESG criteria all the way from the board down to at the working level. Does that give you a capability, for example, to issue some green products like green bonds or get green loans or anything like that? Is that something which you've seen happening?
That's in the capital financing or fundraising area. And of course, all this financing and fundraising, we need authorization from the board, depending on the listing rules. But indeed, there are a lot of sustainable products in the banking side and also in the capital markets nowadays. And we are open to discuss with our banks or other capital market partners. But the core of this financing is that, for example, the company is committed and devoted into ESG, and its fundamental is on the transition of ESG. So on this basis, we are exploring the capital markets or banking side of sustainable financing.
Right. So nothing yet, but just watch this space.
Yes.
Got it. Moving on to the outlook side of things, Venus, what is the future vision of CBL's sustainability? I mean, is there a strategic focus for the next 5 to 10 years? What are, for example, CBL's long-term sustainability objectives, and how does the company envision evolving over the next 5, 10 years or beyond in terms of clean energy adoption and market leadership? And also, if I can follow up with another question, that's a lot, I know, if we're talking about the outlook, but how will the company continue to adapt to changing global regulations and market conditions? And what role do you see, your company actually playing in the global energy transition? Very, very big questions.
Okay, sure. I will explain step by step. So looking forward, CBL's vision is to evolve into a global leader in sustainable marine fuel logistics by 2030. And the company aims to diversify its portfolio further, emphasizing biofuels, LNG, and methanol, and other sustainable fuels as part of its clean energy transition. Over the next 5 to 10 years, strategic priorities include expanding into underserved ports, deepening customer relationships, and capitalizing on economies of scale to reduce unit costs. With mounting global regulatory and investor pressure to decarbonize, CBL is positioning itself as a key enabler in the maritime sector's transition toward a net zero emissions. And you also asked about how to adapt to changing global regulations and market
Right.
conditions and the role CBL play in this energy transition. And CBL is actively positioning itself to adapt to changing global regulations and evolving market conditions by aligning its operation with the tightening frameworks of the IMO GHG strategy and fuel EU maritime regulations. The company's response is multifaceted, combining strategic investment, operational flexibility, and sustainable innovation. To stay ahead of regulatory shift, CBL is scaling up its biofuel operations, particularly its certified B24 blend, and explore next generation fuels like LNG and methanol. And the company has also expanded into new geographies, including Mauritius, Panama, and India, to strengthen its global presence and diversify its customer base, ensuring resilience in the face of shifting trade routes and environmental mandates. And in the broader context of the global energy transition, CBL aims to serve as a key enabler of decarbonization in the shipping industry. Its intensive supply network, robust ESG integration, and focus on higher margin sustainable fuels position the company to help maritime operators meet their climate targets while maintaining operational efficiency. By providing scalable, compliant, and environmental responsible bunkering solutions, CBL is contributing directly to the industry's shift towards a low carbon future.
I just had a thought as well, which is got to do with probably the next 20, 30 years. I noticed that some shipping companies are looking at also diversifying. Some were talking about electric ships, which I think is not viable because of the size of the ships, or using other fuels like LNG, for example, if I remember correctly. Apologies, I'm not an expert. But do you see that as a very long-term trend? Because I believe there's been a lot of issues or challenges in switching away from traditional fuels.
Okay, I think it is a long-term trend, but it's happening right now. And then we see that there are more increased order book of different shipping companies on sustainable fuels, including biofuel, LNG, and methanol. And at the moment, electricity powered shipping is not feasible, as you mentioned,
Right.
that the power is not strong enough. But the methanol and LNG, those that are already using by the shipping companies, and we are also seeing the fast growth of this sustainable fuel. As you see that there is a consultancy company forecasting about 50.4% CAGR growth each year in the coming 20 years for those green marine fuel sector.
Right. Thank you for clarifying that. So just to wrap it up, do you have any final remarks or some key takeaways, Venus?
Sure. In summary, CBL International stands at the forefront of a pivotal shift in marine fuel logistics. Through aggressive expansion, strategic biofuel adoption, and a firm commitment to ESG principles, the company is not only adapting to global changes, it is helping shape them. With a network spanning 60 plus ports, a surge in biofuel demand, and a forward-thinking governance structure, CBL is poised to lead the next wave of decarbonization in the global shipping. And stakeholders can expect continued innovation, disciplined growth, and a strong alignment with global push for sustainable maritime practices. Thank you.
That's great. Thanks. Yeah, and I think it's a very, very important subject that doesn't necessarily hit the headlines very often. I mean, fuel for ships is not exactly. So, I guess maybe in a few months or, a year or a few episodes from now anyway, we can have a catch up and, see how things are evolving.
Sure, definitely.
Well, thank you so much, Venus, for your time today. I really appreciate it.
Thank you. Thank you for inviting me.
Thank you for listening to this episode of the Asia Climate Finance Podcast. Please be advised that this podcast is presented for educational purposes only. None of the information provided should be construed in any way as investment advice. Always consult with a licensed investment professional before making any investment decisions. Additionally, please note that the views and opinions expressed by our guests are personal and may not reflect the views and opinions of their current or previous employers.